Good afternoon. Welcome to Tax Ecosystem on your favorite finance radio, Insight Radio. Today we'll be looking at transfer pricing in Nigeria. With me is Dr. Emeka. Dr. Emeka, good afternoon and welcome.
Good
to
afternoon.
this
Thank
edition.
you for having me once again.
Well, transfer pricing. What exactly is transfer pricing?
Well, transfer pricing is just intercompany pricing of intercompany transfer of goods and services. Now, to put it in a layman's language, it simply means companies that are related, their amount, for example, now if a production company in abroad has another company in Nigeria that markets that goods that is being produced in abroad, to market it, has another marketing company here. So the amount that the company abroad pays to the Nigerian company to market those goods for it, that is what we mean by transfer pricing. Intercompany, supply of services, the pricing for it. That's just the simple aspect of it.
Okay, thank you very much. Well, I know the regulation, the first regulation was introduced, I think, in 2012,
Yes,
which was effective from January 2013. And I'm also aware that there is a new regulation in 2018. But even before the commencement or before the introduction of this regulation, there were some anti-avoidance provisions, under in the law that talks about related party or artificial
transactions. Yeah.
Transaction. Well, what can you just tell us, a brief history of these anti-avoidance provisions and why, we also decided to, move to the transfer pricing regulation?
Okay. Now, transfer pricing regime was born out of anti-tax avoidance provisions of the law. Now, what is anti-tax avoidance? I think the best way to get to this is to have a holistic explanation. Now, like I said before, transfer pricing has to do with when intercompany transactions.
Yeah.
Now, you may ask, what is the concern of government with respect to intercompany transaction? Like they will say in Yoruba, we local government. What is government's own?
Yeah.
Now, it simply means that, for example, if you have a car that you want to sell, and you have a choice of selling it to either your wife or your father, or sell it or to a person that you just saw on the internet. If you, for example, now that car, you advertised it on one of these marketing platforms, and two people called to sell it. Out of those two people, one is a relation of yours. Maybe your wife called and said, "Darling, I want to buy this car." And the second person is someone, maybe a lawyer from Lekki, called and said, "Please, sir, I want to buy this car." Now, we all know by the rule of social conduct that the amount you intend to sell it to the lawyer will be different from the amount you intend to sell it to your wife. If not that, even if it's not free, self to your wife, you may likely give it free, depending on, So, for example, if the car is worth 1.5 million, you are likely to sell it to the lawyer for 1.5 million. But if you are selling it to your wife, you may decide to sell it for 200,000 or 100,000 or 50,000, So now, the concern of government is this: if you sell the car at a higher price, you will make higher income and also you will pay higher tax. If you decide to sell it to your wife, you will make lower income and also you will pay lower tax. So some people do sometimes is that in selling it to companies that are related to each other, they may make so much gain, but state that they sold it for so little because they are related. So what government is trying to do when it comes to transfer pricing is to ensure that, is to make a rule that when you are selling that car to your wife, it will be at arm's length, meaning that you will be forced to sell it to your wife at the same price you are selling it to the lawyer.
So at the market, at the
At the
same
market price, yeah, the same market price. That's what they are. That's what, so that government will also make, because they believe that if you may decide to sell it to your wife at the price you are selling to your lawyer, but make out to the government that you sold it so low, so that you pay so little. You understand? So, and government will lose so much revenue. So when you do such a thing, when people do such a thing, government view it as artificial. So that's why we have anti tax avoidance provision, which states that where it seems to the taxpayer, tax authority, that certain transactions, are artificial in nature, and that nature made government to lose a lot of money, that the tax authority has the power to disregard that particular transaction, whatever amount that you said you made there, and impose on it the amount that they believe should be the amount that you are supposed to. In other words, if you sell that car to your wife, and you made out that you sold it for 50,000, when in actual fact that car is worth 150,000, the tax authority will disregard the 50,000 that you said and insist that you sold it to your wife for 150,000, and you must pay a tax of 150,000 income, pay a tax that is applicable to income of 150,000. I'm just trying to simplify this so that people will understand what transfer pricing is. It's a very technical and complex scheme, but I believe that this is the simplest way to this is the best way to simplify it.
What's your experience with FRS on transfer pricing audit?
Well, normally when you during a TP audit, you discover that, like I said, you discover that it's the same thing, asking for certain documents and asking for documents, and just like what you normally have sometimes with normal auditing, where FRS will continue to, or the tax authority will continue to ask for documents. After you supply those documents, they will ask for more. They keep asking for more without telling you what they have done with the ones that you supplied. So it's as if because the law actually empowers them to do that, to continue asking for documents and but then the law also mandates them to inform the taxpayer that, look, okay, these documents, this is what we believe, this is what we have discovered in this. We don't agree with this, we agree with this. Okay, in view of the fact that, okay, we asked you to provide 10 of this and you provided 8, can you give us the remaining 2? Or, okay, this one that you provided does not really prove what you have claimed in your letter of objection. Can you give? So these are the things, but no, what happens is most of the time is that you provide those documents. These are, high number of documents, that you provide, data and everything. So when you provide all this, and the next thing is, we have reviewed all these documents, can you provide us with so and so? There's nothing like, okay, these documents that you provided, okay, we don't like it, okay, these comparables, we are not happy with it, these are the comparables we have chosen, and this is the reason for choosing this is the reason for rejecting. They don't do that, and that is not correct, that is not right. There should be this thing should be step by step. And when it comes to the liabilities in transfer price, these are not small monies. We're talking about billions. So if you want to take billions from a taxpayer, you should be able to prove it, that the taxpayer is liable to pay this. Of course, we know that when it comes to the tribunal, the taxpayer, the onus to prove that tax is excessive is on the taxpayer. But at the same time, the onus to prove that the assessment is actually, that the assessed amount is actually what it is valid, is on the tax authority. You cannot just wake up one day and tell the taxpayer, okay, we have looked at all your documents, you are liable to pay 1 billion. Okay, pay it. No, the taxpayer is not going to take that lying down.
Of course.
He will like to know why you have assessed him for 1 billion, especially where he has paid some taxes before that, you know.
Okay,
So we are not saying that taxpayers are saints, but then even for you to convict, even God did not just decide to convict the devil. He made sure that he gave the devil, you know, opportunity to explain himself. The same thing, the tax authority should be able to explain to the taxpayer, this is the reason why we arrived at what we arrived at. You know, there should be fair play, you know, level playing ground for these things.
Okay, I think from my own experience, there've always been issues with respect to the transfer pricing methods that are adopted. You know, maybe sometimes the Federal Inland Revenue Service will say no, we are using cost plus, while the taxpayer will say no, I'm using maybe TNMM for my own this thing. I know this has always been an issue, and in fairness, I'm not sure there's any particular law or any particular regulation that says that you must use a certain method to prove your benchmarking analysis. So this is another area that I think needs to be looked on, because I think that is where a lot of taxpayer and revenue authority disagree.
Yeah, from experience, what I've noticed is this. Like I said, you know, this transfer pricing rules was developed by OECD. Now, OECD is made up of countries that are very, very advanced when it comes to taxation. These are advanced countries. These are countries that have left the realm of even some of the levels that we are still grappling with in Nigeria. You know, so these rules, you know, is persuasive to argue that these rules were actually meant for this kind of countries. Now, Nigeria has decided to adopt these rules and implement it without, unfortunately, the certain important factors are not present. A good example is comparables. Comparables simply means the third parties that you are going to use to compare with the transactions of the taxpayer itself. Now the question is, do we have that? Because for you to, you know, to be able to compare, you must have all the necessary information at hand.
Yes.
Now those information, are they really
readily
available? Do you have Nigerian comparables? Can you do a proper analysis and benchmarking, you know, using a typical Nigerian or even African?
I thought we have some database.
We have those database, but then you discover that, you know, for Nigerian companies, the database, if you look at it, most of the time the companies that populate this database are foreign companies.
True.
Some of them are not even in Africa, and you cannot really compare. Honestly speaking, you cannot compare. How do you compare a company that is operating in Nigeria, that is importing goods from Apapa port, you compare it with a company that is based in Asia, where there is efficiency, pure efficiency? You cannot even begin to compare. You can't. It is a bit difficult. No matter how you try to move the basics, the percentiles and everything, it may be very difficult. It may be very difficult to compare. That is just one of the basic challenges. Now, the transfer pricing regulation provides for about 5 methods. There is CUP, that's comparable uncontrolled method. Yes. Then we have a resale pricing method.
Yeah.
Then you have
the net profit margin.
There's the TNNM.
Yeah.
Then there's profit split. Then there's the third, the other one that there are 5 of them, and the law says that you use any of them that is most appropriate for your transactions. Yeah. You know, most of the time the transactional method, that is CUP, resale price method, and the other one are the starting with the CUP method. That is the one that is always the best, because you use the price of the third party and compare with the price that the taxpayer is selling or buying from a related company. If the two are not the same, then you adjust to meet up with the third party. But the law also allows you to use other methods if the other ones are not appropriate. But what another thing that the law says is that when the FIRS wants to analyze or assess a party, benchmark, you have to use the same method that the taxpayer used. Now, if you use that same method, it isn't, then there's when you can change to another method. But what happens most of the time is that FIRS decides to use the one that they feel is most appropriate without subjecting the taxpayer to the same method that the taxpayer used.
Without subjecting it to scrutiny, whether it's meets.
Yeah, so you just bring your own method and impose, at once, and that causes a lot of problems, So that causes a lot of problems. Then apart from this, other issues that I have with that regulation, apart from the fact that it imposed an excessive and unlawful penalties, another issue I have with that is that regulation seeks to adopt OECD rules and United Nations rules, without a legislative backing. The law is that you cannot apply a foreign law into Nigeria without it having been domesticated. So that particular provision is something that one day we may have to challenge. Then apart from that, also the regulation also provides that FIRS is not bound by the assessment by customs or other bodies. So in other words, if in paying your duty you adopted a particular amount of money, in paying your custom duty, FIRS is not bound by that assessment by customs. They will have to do their own, And there's also the issue of that in transferring intangibles, that they impose how much I'm going to, how much I'm supposed to sell my product, to a third party. Why are you the one dictating? What the law does is to regulate the relationship, not necessarily to impose the terms. The terms should be left for businessmen,
exactly.
not for the, So we are not in a socialist kind of government where government is the one that makes the contract. Let the businessmen, let the businessmen make their contract. Then, in as much as it is within the law, and then the tax authority should be interested in taxing the profit. But descending into the arena of trying to make the laws, make the business, dictate the terms for the business, is that, to me, is a no-no. These are the things, these are the issues arising from that regulation that.
Thank you. It will be interesting to note that we await the some of these decisions at the tribunal level, and then let's see how it goes, so that at least for one or two references one can refer to some of these decisions, and probably it's really going to resolve some of the gray areas in transfer pricing. And I also noticed that a lot of things have been done in the developed nations with the African countries are still lagging behind. Though I am also aware that FIRS now has a unit on transfer pricing. I hope this unit is well equipped and the right skills and all that trainings to upgrade to upgrade their game with respect to transfer pricing audit.
And to actually praise what to the credit of FIRS, the government has somehow stepped up its game in terms of investigation and auditing. In other words, there are some, like you said, there are some exchange of information, agreements that Nigerians are entered into. It means that all these foreign companies, all these multinationals, they cannot really hide anymore. Anything. So whatever they tell the Nigerian Tax Authority, FIRS has the power, has the ability to confirm from their parent countries and everything, countries of origin, to know whether what they are saying is the same. And also, of course, there are just country by country reporting and all those things. So all these things help in kind of ensuring that that these multinational organizations, that they pay what they are supposed to pay. They pay us what is due. So, but however, my only concern is that in doing this, I hope the FIRS does not go overboard. And in doing all these things, that in trying to get as much golden eggs as possible from the geese that lays the golden egg, that they don't end up killing the goose or trying to, discourage the goose from coming to Nigeria anymore. So in other words, if the tax authority must also respect the rights of the taxpayers. All these foreign multinational taxpayers in doing this, they must not overdo it. They must not overdo it or do things that are beyond their powers. Example, imposing 10 million for failure to file transfer pricing documentation, to me, is beyond the powers of the FIRS. That particular provision cannot stand any serious judicial scrutiny.
Okay, thank you very much, Dr. Emeka. We come to an end of this edition on your favorite program, Tax Ecosystem, on your first financial radio station. Dr. Emeka, thank you for joining us.
Thank you very much.
Have a good evening. Thank you. See you next week.